The Guarantee Company of North America hosted a roundtable recently examining the Canadian credit insurance market. This is the third and final part of the series that takes a look at whether generalist brokers can sell this niche product, what the underwriting requirements are, and what companies are ready to help brokers sell credit insurance.
Today, the list of specialist brokers is clear, and there's a short list of first-rate specialist brokers who know this niche and can look after clients or help generalist brokers. My instinct is that there's still an untapped market in Canada, partly because Canadian commercial clients have been very loyal to the independent broker, probably more loyal than almost any other Western developed nation.
Rightfully so.
All kinds of good reasons, because Canadian brokers are the best. But here is this untapped market, partly because the generalist brokers have not been comfortable discussing this banking product when they're insurance professionals. And the idea of expanding the pond here by getting more generalist brokers to be at least comfortable enough to broach the topic, introduce the product, and then partner with a specialist to bring the solution. I think there's still a big gap there. That'd be up, our perspective anyway.
I think there's also a big geographic issue out there as well, because the specialist brokers are concentrated in a couple of different marketplaces, and it leaves a huge part of Canada untouched, where there's no specialist brokers available.
But I think that's a fair point. I think the specialists have evolved in the manufacturing core of Canada as Canada's economy has evolved. I think there are definitely regional gaps that could be filled by good entrepreneurs that spot the opportunity and work out how to run with it. I agree with that totally.
The underwriters often are asking specific questions about the credit management practices of an organization when they begin to initially underwrite a policy. So from the underwriting perspective, is there an expectation that there is a credit management process in place? How do you feel about the underwriting of a company that has credit management versus one that doesn't have credit management? What are your thoughts on that?
From the underwriting point of view, what I can say is, like, when it comes to the credit manager, we have one of our largest clients is we work very closely with the credit manager there and the credit insurance product and the broker to complement what they already have in place. A typical example would be like they will call us and they will say, we are not comfortable getting into this market. It's a new market to them. So the credit manager will be working with the credit manager and with the broker for that client to access a new market for the next 3 to 4 years until they're comfortable in that market, and then they take on that market themselves. So it is a very complementing product to the bigger clients. And what we're doing for the underwriting process, a lot of time we do our due diligence on the credit group, on the credit department, the credit manager and the authority level there. And we typically give a bigger discretionary limit for the client to take on their own limit, and we'll ensure that limit that they've even agreed upon to their own client. So there is a level of due diligence we do to the larger client where there's a credit department in place.
What are you, as brokers, seeing as the chief reasons why your customers are buying accounts receivable insurance?
Extension of terms, what Mike mentioned and Jay mentioned. We ran into a manufacturing client of ours that wanted to sell. They manufactured large equipment. It has a long manufacturing and testing period before it can be shipped overseas, and credit insurance allowed them to get terms from their suppliers and free up some capital in their bank to allow them to build that and sell it internationally. So that became a tool that was part of that big job, probably the biggest thing they ever built.
I think the most often reason that we see for getting a call on credit insurance is that the banks are demanding that credit insurance be in place as a client gets to a certain size and above, and they need that to substantiate good receivables from bad that the banks are lending against, and get the margining rates that they see. The other reason that we see calls coming in is after a catastrophic loss has occurred. A big bankruptcy can occur, and people will find out that other people on the creditors list were insured, and they got 80–90% of their money back, whereas this company didn't. And they want to take advantage of that kind of a product going forward. Not that it's going to help them resolve what happened in the past, but they really don't want it to happen again.
And isn't
And
that
they're
where
probably
the risk,
asking a new broker
that's right.
when they ask for it.
I was
at
about
that
to say
point.
that
Then-
maybe that's where the risk is for us as brokers, is really that conversation is, that product's available?
And
How come
I
you
didn't know it.
Yeah.
Right.
How come you didn't tell me?
Yeah, and that's an E&O risk for the broker.
Yeah. Well, it's for sure a loss of client faith, professional services, your advisor at the end of the day.